Right, we're just back over onto my screen, but actually I've moved away from Ninja and I've come over to MT5. You can either have MT4, MT5. I just happen to have MT5 because it's got more time frames. It's a bit like Ninja. It doesn't. It's a bit more flexible. As I said, you've got 1 minute, 2 minute, 3 minute chart. MT4 has whatever time frame it has because this actually ties up very nicely with oil. We always talk about in our Forex program, there's a whole module devoted to what we call relational analysis, and that is basically looking at outside the market that you are actually trading. So obviously if you're trading Forex, you really need to have at least a passing understanding and of what is happening in the bond market, the commodity market, and equities. And similarly, if you are trading index futures or you're a stock trader, you really, looking outside your immediate market will really give you an awful lot of pointers. First of all, as to market sentiment, understand the currencies that reflect sentiment. For example, like the Swiss franc. For example, like the Japanese yen, and you'll read about it more and more in market commentary and market analysis. They talk about, well, the yen's being bought, or the yen's being sold, or the Swiss franc being bought, or the Swiss franc is being sold. And I think that's a big difference that David and I have noticed, certainly since we first started a few years ago. Everyone kept to their own market, a bit like silos, like they strayed in their own silo, and they didn't look out, they didn't peek out, across to another silo. And if you're an oil trader, then looking at what is happening with the Canadian dollar, or if you are trading a CAD pair, you really ought to be seeing what is happening in the oil market, because if oil is having a huge crash, then that is most certainly going to be reflected in the Canadian dollar. And although a lot of the commentary this afternoon has been about the dollar Canadian, those are the two logical currencies, if you like, for the session that we're in at the moment. Actually, you often find some fantastic trades in the cross pairs, in particular the pound Canadian and the euro CAD. The euro CAD is one of these pairs that can deliver really, really nice trades, and in some ways, this is the daily chart of the euro CAD, and you think, my goodness, what about all this congestion that it's been in since April of this year? Yes, it has been in a big congestion around the volume point of control, but this is a great example of Wyckoff's second law. Of course, in effect, the longer a market stays in a congestion phase, when it finally breaks away and moves away, that move and that trend is likely to be very, very strong. And at the moment, we have had the breakaway, and the pair is basically in a really nice uptrend, and we can see today's candle as it moves out. Now, this has also been driven by a lot of positive sentiment for the euro. Looking at data, and again, this is a topic we'll touch upon in future webinars, and that is looking at the daily chart for some idea of the type of price action that we could possibly expect in the faster timeframes. When a market is in a strong trend, either up or down, the chances are, the moves in the faster timeframes, you will get pullbacks. Those pullbacks are unlikely to be tradable because the bias on the daily is very, very much in one direction only. It doesn't mean you can never take perhaps a quick scalp counter trend, but it's going to be much more difficult than if it's trading perhaps in a sideways market, in a ranging market. You might have big candles, but because there's indecision, that's why it's trading in a range. That there's no firm direction either way or another. You're just as likely to get a reasonable trading opportunity to the upside as you are to the downside. And I am talking faster time frame, but with the Canadian, what has happened here, I've actually got the Renko chart, because the Renko is just fantastic for helping with entries. It keeps you in a trade, particularly through pullbacks. But as I said, because this is in a strong uptrend anyway, any pullback or correction is likely to be quite shallow. What's happened here is we have the trend dots, we have the little bricks going red, but everything, as you can see here, the trend dot stayed blue. The monitor has actually stayed blue until we get to, this is clearly a significant resistance. It pulled back. The trend dots did change. They did go to red, and in fact, we did have this little this minor correction here. Maybe that was enough in there for someone that was possibly on a very, very fast time frame. So I have the Renko on the MT5. I tend to use the Renko. I have the 3-minute chart. And what's interesting about the 3-minute chart, we've got again a nice VPA signal. We had this is that break lower. We have a really nice 2-bar reversal here, actually on the 3-minute. I'd have to look at something like the 1-minute. There's probably a little sort of hammer candle there. Then it moved higher. And then it went into this congestion phase around the volume point of control, which corresponds with the congestion phase that we see here on the Renko chart. When I said about significant levels, again, this is where we are. This is the R5. The break through the R4, breaking through the R4, is actually went up through on a volatility candle, which means it's got momentum behind the move. There's also some decent volume underneath it. We did have a retrace to within the spread of the candle, but we did have a clean break away from the R4, which was actually on the hourly chart. And if I go back down to the 10-minute, here we are. It's actually gone through the, as I said earlier, it's gone through the, once it goes through these intraday levels, which is certainly the R6, you have to go to the slower time frames to see, well, where is this heading next? You know, where is the next logical point for this particular move? And as I said, we've got 158.69. We can go right back down to the Renko chart. This is, as I said, that's the level that we're talking about at the moment. Still wants to go higher. What do we have here? The CAD is still falling. So at the moment, it looks like it's, you know, can it go any further down? Yes, of course. Markets can stay overbought and oversold a lot longer than you and I can probably stay solvent. So VPA signals, using levels to pick out potential price objectives, price targets, and sometimes you have to go to the slower time frames, particularly if you have had a really strong move in the faster time frames. That's all I wanted to say, and also wrap up, as David was talking about the Canadian dollar, the sell in the Canadian dollar. Where was that strongest? We go back to my dashboard of all the currencies. I've actually picked off the Canadian on the hour, and you've got the Euro Canadian. This value here, 63, tells me that it's been a strong move, and it's the pair in which the Canadian has moved the most in terms of selling against the euro. As we can see here, it was obviously sold off against the Swiss, but not as much. So these values that we have developed on the matrix can actually give you a lot of information about what type of move the pair has produced in this particular time frame. The next one is the pound Canadian, and we've got, in fact, it's been taken over by the New Zealand CAD. We've got two commodity currencies traded against each other. Right, that's all I've got to say on that. David, can I pass over to you? Is that okay? Do you mind? Because I think David has got all the tabs open. I'm going to say goodbye. It's been lovely having you here. I hope you've enjoyed what we have shown you. I hope you've learned something maybe that you did not know before. Enjoy the rest of the trading session, enjoy the rest of the trading week, and we are back on Tuesday with our usual London session, and then we are back on Thursday for this session. So I'm just going to pass back to David so he can wrap up. Turn myself off.
Thanks, darling. Oh, there we go. There we go. Just to very quickly run around where you can find all the bits and pieces. Quantum trading, you'll find all the indicators here at quantumtrading.com. TradeStation TradeStation is coming. Let's start with TradeStation. That's coming along. Two versions of that. We've got TradeStation 9.5 and TradeStation 10. TradeStation Securities. TradeStation Global, which is the 9.5, is the relationship between interactive brokers and TradeStation. Very powerful. It means you've got the advantage of trading, fantastic charting application with the advantage of trading with a deep discount brokerage. So it's a terrific relationship. So that's one. And then on the other hand, we have TradeStation Securities, which runs on version 10, got radar screen, we've got radar screen on 9.5 as well. It's just a very, very powerful platform. And we've developed all the indicators to work on radar screen as well. So it just means you can have them arrayed on the platform. You can see what's coming up. You get alerts on everything. It's just immensely powerful, and it's a terrific platform. So we're delighted, and we can't wait to get that launched. Hopefully in the next sort of 2 to 3 weeks. There's a huge amount of work we're doing at the moment in terms of building the support pages on the various sites, but that's the plan at the moment. MT5, we've got NinjaTrader 7.8 and TradingView. What we'll be doing with the TradingView is, for those of you who have it or are aware of it, at any rate, you'll know that when we developed the indicators initially for TradingView, the Pine script really didn't give us flexibility to port them all across. We're now delighted to find that we have got that option in terms of object and line drawing. So it means we can port over all the rest of the indicators. And if you are an existing customer of Quantum and you have the full TradingView package, as was, you will get all those additional indicators free of charge. It's just our way of saying thank you as we do the upgrade. And that's a big thank you, I have to say, because you're getting a currency matrix, currency array, a currency heat map, and one VPOC. I think there's one or two others as well in there. So it's a really nice upgrade. So if you're on the TradingView package, or perhaps you're thinking of buying it, now's a good time to buy it, because you're going to get a bunch of indicators free and not pay us any more. So there we go. That's on the indicator side. And remember, if you do invest in the full package, whether it's on MT4.5 or NinjaTrader, you always receive all future indicators from us free of charge, and the same will apply to TradingView. So if you invest in the full package, it's just something we do for all our customers. We've done it since day one, and I can assure you we've got customers who started with, I think, 10 or 11 indicators, and we're now up to 18 or 19, for which they've paid nothing. So it's a fantastic bonus. This is the Forex program, which you find over at quantumtradingeducation.com. It is the complete Forex trading program because it does precisely that. There are 5 core modules: psychology, fundamental, relational, technical, and mechanics of trading module. And then below, there's a whole raft of stuff: VPA chart examples, how to use indicators, putting it all together, topic webinars, webinar library and resources. It's massive. It's 200+ hours of video. You also get, obviously, all the indicators. It includes the full set of trading indicators. So by virtue of that, you'll get all indicators we develop in the future free of charge anyway. And in addition to that, you've got the VPA membership site, which is hosted by Anna and myself every day. You can ask questions. We have fellow traders in there of all levels of experience, and they are more than happy to give freely their time to answer any questions also. So it's a great program. We're very proud of it. We've got a whole load of students on it now, all doing really well, but you take it at your own pace. There's no pressure. If you have a full-time job, and we always say keep the full-time job while you're learning, please don't give up your paid salaried employment. Learn to trade Forex, because if you try and start this and expect to make an income from day one, you'll struggle, because it's too much pressure. You don't need that pressure. Keep the job and just learn with someone else paying all your bills. It's perfectly valid, as we tried to explain today. VPA works in all time frames. So whether you're trading on dailies because you can't sit in front of a terminal all day long, makes absolutely no difference, or 4-hourly charts, whatever it is. You can set up trades. You can put limit orders into the market, so you set your levels and so on and so forth. You can put trailing stops. So it's all pretty much mechanically set up for you in exactly the same way as you would do if you're sitting in front of a screen. Finally, this is Anna's site, annacooling.com. You'll find all the books there. They're all here. They're up on Amazon, either in Kindle or on paperback, and you'll find all the links to other things there as well. I think that's about it. Thank you very much indeed for coming along today. Hope you've enjoyed it. Enjoy the rest of the trading day. The VIX is still falling, so equities must still be rising. So perhaps broken. Nasdaq is okay. So it's broken out of that range we looked at earlier on. So there we go. So it's just patience into congestion, and off up we go away from that volume, away from that volatility candle. So it's probably breaking away from that right now as I'm speaking. So there we go. Fantastic. Enjoy the rest of the day. We will be back. This is Thursday today, isn't it? Yes, we will be back on Tuesday at 7:45 London time for the US Forex session. So enjoy the rest of the day. Have a great weekend. Stay safe. Very odd times at the moment, but stay safe, and we will look forward to your joining us next week. Bye for now.